hope that doesn't mess up your audio.
No, it's good.
Yeah, we are, we're not super, he's super picky. I'm not super picky, and I'm the one that edits.
But when we did this on Monday with another person, and it's kind of like level, like matching, so that you're speaking into the same microphone, so that we're all speaking into our computer microphones. And this is just so I can hear a little better. But
right. Okay.
Yeah.
Okay. Well, sounds good. I hope I brought a few notes, so I'll try not to look at them. But
you can. Nobody watches our videos.
Oh, okay. I didn't know that. Yeah, I was thinking like, yikes, some of these topics I refer to my notes a little bit, but hopefully it's what you were needing or wanting.
That's all right. I mean, I think you're the first like CPA small business kind of like, this is a different lane for us a little bit with type of guest. Normally it's just peers of ours.
Okay.
So you have a lot more expertise in something that people need more expertise, like a professional to know about this stuff. So
yeah,
I feel like, you having notes is not out of the question, because
okay.
People are gonna
we want you to have notes, but notes
people know that we kind of bullshit a little bit sometimes, and we're just talking from our experience, but
Yeah, I don't know what it is. As soon as it's like a recording, then it's like I'm so nervous. But I've been wanting to do this with clients and stuff too, so this is good practice.
Oh, good.
Yeah.
There you go.
I do want to tell you that in the middle of the recording, we're gonna have to do a really awkward ad for a kiln company.
Okay. Cool.
So I might ask you like, how
What do
should
you know
you
about
expense
kilns?
a kiln? And we'll just kind of go into it. So
what will you ask me?
Something about kiln. Actually, I have an idea how we can link it. So Becca, I think you'll kind of get my gist when we get to that part.
A kiln, and that's what we use to fire all of our pots in. I don't know how much you know about ceramics, but
I don't know. I did know the kiln. I don't know too much about ceramics, although I do have a best friend that I'll send her this afterwards. She's in Maui, and she is definitely, into pottery and creating. So I want to make sure she's following you guys as well.
Nice.
Cool.
So that ad though, yeah, I'll just answer whatever.
It's not going to be like something you need notes for. It's just going to be a conversation starter so that we can roll into an ad, but it's not.
Oh, got it. Okay.
It's not, but I do have a linkage kind of thing that could be, I have an idea for something, so.
Hopefully I don't.
No, it'll be good.
You won't. We've already wrecked it enough. You're fine.
This is like our fourth recording doing the ads, so it's a newer sponsor we just got. And we got a commitment from them, so we're trying it out and mixing it into the conversation's a little more natural than just front loading it and then people skip over it. So yeah, we'll see how it goes.
Okay. Hopefully I catch the drift of what's happening.
Hopefully I catch the drift of what's happening.
Yeah.
Cool.
Okay. So we can start whenever.
Yeah, Becca already started the Skype, so we'll end up pulling the audio from the Skype.
Yeah.
And then we'll go from there. So we'll do like a soft roll in. It's not like a formal, anything like that. So.
Okay.
But okay.
Okay, cool.
Any questions before we start? Becca, was there anything else? I think if there's anything you say that you're like, oh, I shouldn't have said that, or you want to like cut it out or anything.
Yeah.
I don't know.
Just,
what did you tell them? Like,
is if there is something that like right then you're like, oh, I shouldn't have said that. Just keep note of what time is on the recording if you can. Okay. If you can't, that's fine. But maybe jot it down on your notes so that if you're like around 25 minutes, I said this and that was not okay, then I can cut it out. But typically we don't cut anything out. It's just just a chat. And
yeah. So, if anything, it's like if I get all nervous and say something and can't answer, that could be edited out. But yeah, no, that's cool.
That's part of it too. So. It's totally fine to be like, I don't really know how to answer that. And I'll have to get back to you.
Yeah, that's true. That could happen.
Which is fine,
Yeah, it's fine. We don't expect you to be a superhero.
I know, it's like the Joe Rogan scientists that are on there. Like, how do they cite all this shit they cite? And
Yeah, like how much are they
don't have
preparing?
notes.
Some of it do, and I'm like, all right.
They're super smart. So I'm not that, but hopefully we'll get some answers out to your peers and yeah.
Cool. Oh, and before we start, do you or maybe I should just ask it on the thing, but I was gonna say, like, are you accepting new customers if somebody hears this and is like, oh, she sounds like somebody that I would like to work with? Like, is that something we should ask you on the podcast for somebody to like?
Yeah, actually, that's good you mentioned that. So I don't take on clients that are like just basically walk in for tax purpose only. We mainly are doing like accounting services, like month over month type of subscription through QuickBooks. So that's kind of what we specialize in, is the accounting side of it. And then at tax time, we either liaison with the tax preparer or I can help set you up with a tax preparer. So yeah, no, that's a good question. I am accepting monthly accounting services, but at this time I'm not doing like just a la carte tax, because it's too hectic, because people don't have their stuff in order. So we start with getting that part first, and then tax season's kind of like a breeze when you have stuff organized. So I think that answers your question. So yes to accounting and accounting setup, which people might need, which would be great. But just not to like walk in tax type work.
For sure.
Yeah. And you mentioned your entrepreneur virtual experience through email. So we can always mention that if you're still accepting waitlist or whatnot.
Yeah, I was thinking about that. Like right now it is a wait list because I'm not organized at being able to launch this in my busy season. But yeah, that'd be cool. I can send you that link or whatever.
Yeah, we can mention it in here if you know exactly where people could go, or if you just need to say the website and then here's how you get, we could always mention that too. So
okay, cool. Yeah, that'd be cool.
All right, so let's start. This is the weirdest part. So we say we start, and then we were like, "Hello, we're live."
We're live.
We had like 2 back-to-back interviews this week, and we're joined now by Jamie Boyack.
That's right.
Yes, sweet, got it.
Forgot to ask that beforehand, how to pronounce your last name, but Becca got it.
And Jamie is an accountant, and right, just as like
yes, CPA.
And Jamie, would you like to tell us about yourself, where you're from, what you do, all the things, quickly? Like, you don't have to like go into in depth or anything, but
yeah, for sure. My company's Aloha Friday Professional Corp, and I mainly work with creatives and makers, lots of artists, photographers, and helping people know their numbers and overall just financial fitness of their business and some personal finance too.
Cool. Where are you located in Hawaii?
I'm my company's completely online and virtual, so I do love to travel around, but I'm based in Canada and I'm based in Hawaii and kind of move around from there.
Oh, cool. So like if somebody was in California, they could still like hire you, and it would still...
we focus on accounting services in Canada and the US, so that's QuickBooks Online setups and monthly accounting, and so then in Canada we file taxes. In the States we work with enrolled agents in each state to actually do the tax filing.
Oh, cool. That's awesome.
Oh, nice. So you have like a network of people, because each state is very intricate and sensitive to what's applicable for that state and all that good stuff.
Yeah, it helps. I mean, I feel like on this call, I'll say like, depending on your state, like 99 times, because none of them work together. None of them have the same rules. Every state website is different. sales tax, of course, all of that. So it is nice to kind of have enrolled agents around the country that can help people with the actual tax filing.
Does Canada work similarly, or because it's like, do the territories and things like that work like that as well?
Yes and no. Like our GST sales tax is pretty much across the entire country, but some provinces have provincial sales tax, so that's kind of how they make it extra confusing for people as well. So yeah, no one works together when it comes to numbers, I guess.
Well, that's good to know that it's not just the United States that sucks at talking to each other.
No, I think it's crazy everywhere. I was recently in London in the UK, and it seems like maybe it's a little bit more streamlined there, but I don't know. I haven't really dug into it, but yeah, North America, we're all over the place.
Yeah.
Okay. I actually heard from you and like got familiar with you because you were on the Boldly podcast like probably 3 or 4 years ago by now, from talking with Heidi and Alyssa.
Yeah.
And how did you get connected with them, or how did did you have a connection with Alyssa or Heidi before?
I think it was just Instagram. I think we were following each other on Instagram, and they had their podcast. I believe that's probably how it started. I love Instagram because I'm like so visual and I love all the art and scrolling. So I'm sure it is, Instagram.
Nice.
Yeah.
I also remember that episode, and I was like, this is so good.
Yeah, it was something I had on my radar of like, we need to get a tax professional on to talk because we love the business side of it and the money side of it. So it just made sense, but we just never had a person in mind. And then I was like, maybe I could reach out to Heidi and ask her who she had on, because I think the podcast is gone now. I can't, the old episodes, and I was like, who did you reach out to? Like, and then I think we connected through Instagram, and you were gracious to join us. So.
Well, great. Yeah, no, I know it took a minute to sync in our schedules, but I appreciate it.
Yeah, thanks so much.
Well,
all right. Yeah. We have a ton of questions.
Oh,
and we said feel free to, answer as much as you can. Like you said, the states are different and all that stuff, but some of them are just high level things that I'm sure a lot of people would like to know about. And then we'll kind of get into some specifics that might relate to like what we're thinking about, and then you can answer as best as you can. So,
and I think it's important to like put a little asterisk here and say, like, obviously Jamie's not a superhero, so she can't answer everything. And if she says it, what I would say is take those words and then go research them, because she could be wrong, she could be right, but make sure that you are not taking her word as, I would say, like, take it as a first step to go research the things yourself too, because that's smart.
Yeah, I think too, just like as the first stepping stone, maybe you then go talk to the person that's been preparing your taxes, or maybe it's just a conversation starter to hiring an accountant or that kind of thing. So you're a little more self-aware of what you need to know. I think it's a good starting place anyways.
Yeah.
Awesome.
Great.
Yeah, it's always good to be coming into a conversation a little bit educated on something. Like, you got a little bit of knowledge of, something, so you don't come in, you're like, all right, here's all my receipts, do my taxes, and make magic happen.
Yeah. Right. Yeah.
I'm sure that's really stressful on the other side of the table as well. So I'm sure you've encountered that.
Yes. Yeah, for sure.
Yeah.
Okay, so we'll start with a semi-easy one. Hopefully it's easy. I don't know. I'm sure there's complexities. Okay, what are the differences between sole proprietorship, DBA, LLC, S corps? And like, where would you say most of the business creatives kind of fall in?
Yeah.
Yeah.
Yeah, no, I think that's a good place to start. I guess there's the 5 main ones like that you just named off: sole prop, LLC, S corp, partnership, and then a C corp or a corporation. A DBA is just a doing business as. So if you're a sole proprietor, but you don't want to, have your company just be your name, and you have your creative title that you want, that's when you would file a DBA with your state. And so that just lets you be able to accept funds that way, or start, business accounts under that name. So it's not really its own entity, but it is just a doing business as if you want to collect funds kind of under different revenue streams.
Right.
Does that connect with a federal tax note, like a FEIN number, or is that different because it's state related?
That would be state related for the most part. Usually as a sole prop, if you have an EIN number, which isn't required as a sole proprietor, then it would just be with your name. And if you then transition to an LLC, which would be kind of the next step up, you would need a new EIN number associated with the new LLC name. And so that's kind of sole props. I feel like when people are just getting started or just making money, the IRS just sees you as a sole proprietor. You are the business and so forth. And the next level up, when you're ready to have a little bit more like liability protection, that's where that LLC can come in. And most makers in general are single member LLCs. They're just themselves working. But in the case that you might have more than one member, then that becomes a partnership, and you file taxes differently kind of for each of these stages. But for a sole prop and an LLC, any of your profits and losses, all of that is recorded on your personal tax return. And that's just your regular 1040. And really it just adds in some forms. So you have a Schedule C that you're then filing and for business activities. So pretty straightforward tax-wise. I think the biggest difference, or what seems to be trending, I get a ton of questions about S Corps and wanting to elect to be an S Corp. And I think just everybody wants to be an S Corp. And I think we need to tread carefully there, or slowly, because there's a lot more that goes into an S Corp, even just with how you pay yourself. So you're required to be an employee of the company, and just having the appropriate amount of cash flow monthly in order to pay consistent payroll, even just to yourself, can be hard when you're starting out. So the attraction there is that it's going to save you a ton in taxes. And unless you're currently paying a ton in taxes, or your net income, that really bottom net income number, is high, you may not even really be eligible to be an S Corp, and it may just be creating more paperwork for you. So that
the
would
tax,
be something that
the tax benefit is because you're not paying self-employment tax as well. You're not double dipping the taxes because you are the employer as well as the employee, sort of. That you
right, yeah,
and
you can elect like how you're taxed at that point. So it's more just like a tax planning move. Or some people like the idea of being able to pull like a paycheck like they would at a regular job, because in that way you're paying income tax throughout the year because it's withheld from your paycheck. So similar to any of our jobs we had before we became entrepreneurs. Your income tax is paid each and every time you're paid your paycheck. And that would be different as self-employed or taking draws where that's not being remitted. So I think the biggest holdup, then people file, they elect to be an S Corp, and then they realize they don't really have the cash flow, especially during certain points of the year, to even pay themselves that way. So I would be a little bit more careful, or ask more questions before becoming an S Corp.
Yeah.
You mentioned the partnership where it's two people. That doesn't necessarily mean there's like an owner and an employee, as in two people. It's more like Becca and I
like
co-owning.
Shareholders, like two members of the company. And you'd file, the only difference, I guess, with partnership, you would file a 1065 as like the partnership return. And then any of the profits and losses pass through to the members. So you're still, in essence, like filing and paying taxes on your personal tax return through a K-1. But the actual business, I guess, does file a return, and then everything passes through to you individually.
And is that typically if the people are not like spouses, like you're not like a husband-wife kind of partnership?
It would actually be for any members on your LLC paperwork when you register. So it doesn't matter if you're husband or wife, or if there's 3 of you or 5 of you partners in a company, the profit and losses are split, and a K-1 form is filed with that partnership return. And then all, 5 people would report that on their taxes, or 2 people, or whatever.
Okay.
That's
Are there a
what
lot?
we should do. That's what we should do.
That's what. Yeah,
Pod-
that's what I was asking. We got to figure this stuff out for the podcast because we're starting to get sponsored. So we're like, how do we do this thing for tax purposes? And are there people?
Yeah.
Are there people
So
that co-own
I
that
think
do LLCs too, or is it just like partnerships the way to go because it's more equal split sort of thing?
Well, as soon as you, like, if you register an LLC and you register 2 members, you're automatically a
Automatically.
partnership. Or like, you're no longer a single member LLC. Now you're in that partnership spectrum, like this.
And remember,
Oh,
if you do if you do a partnership, make sure there's a documentation and you get your lawyers all up and running on those things.
Yeah, I think for sure, even with spouses, I think sometimes people feel like it would be easier, like, well, we'll put both our names, like, even if the other person's not involved. I've had that happen with photographers. And it's better not to do that in some ways, because it's not really a partnership. That person's not doing anything. You're just married to them. Not just, but like,
Yeah.
they're just
it's
your
not like a
spouse.
joint bank account where
It is
you're
your business.
yeah.
Yeah, it's nice to just have that separate and have it a single member LLC. But again, it would depend on tax planning. There might be a reason why your accountant set it up that way and that kind of thing.
Yeah. Interesting. Oh, okay. This is the next question, and I also have a question tacked onto it.
Okay.
Yeah. So how would you go about starting an LLC? Like, what's the, like, is it a state issued thing or is it a federally issued thing? Like, and if you move states, do you have to change? And that's
Yeah.
the tax question.
Yeah, no, for sure. Every time you ask a question, I have like a small panic. I'm getting used to the podcast. Yes. So LLCs, that's all state level, and it's always like depending on your state. My famous last words, because no one works together or has the same rules. So you would go to your state tax website, and I can send you a good resource that kind of lists every state if you wanted to share that with your audience. But you just register for an LLC right there online. And usually it starts with a naming process, because there's rules on how you can name things. They check the registry, make sure nothing's too similar, all of that. And once you get that go ahead, it's just filing the articles of organization. So there's usually a fee associated, $100, $200, depending on the state, and then and then it's registered. You hear back relatively soon. On the form, it will ask you about a registered agent, and probably 99% of my clients are just list themselves as the registered agent. This is the contact with the state. There is, kind of as a warning, there's a ton of companies out there. If you Google start an LLC, that will do this for you, and usually it's way more expensive than just filing the form online.
Yeah.
Especially with like an EIN number, your identification number, that can be done on the IRS website. I think it's like $20, and it takes 10 minutes.
It's easy.
Yeah, right. So that's just something to be aware of. If you're kind of Googling for that, I would always just say go to your actual state site, not Google for that, because you're going to get a ton of these consulting agencies that are going to probably overcharge you to set up the LLC.
So why do you go to the IRS website to pay the $20 for if it's state related? Or is that?
Oh, sorry. Yeah, that would just be like, once you have your LLC set up with your state and that is approved, then you need an EIN number. And so
okay.
that is why you would then go to the IRS site and register for an EIN in the LLC's name.
Okay.
The other thing, once you have those things, is you could go to your bank and create a business account in the LLC name. So usually they would require your articles of organization. Sometimes they'll require that EIN number, and depending on your bank, you can see if they have anything else. Yes.
I have, so I still have like my business bank account, but I don't have an LLC in Washington. And I'm wondering why you need a business account, like business bank account. Like, is there like any reason why you can't just go and get just a regular bank account as opposed to a business bank account?
Yeah, so good question. It's a hot topic when we're trying to get people set up often. I would say the biggest thing that I require, kind of like a non-negotiable with clients I work with, is that there has to be like a clear separation of personal and business funds. So if you want to rig that up a different way, I'm open to it. I don't recommend it because usually the business accounts are going to let you pay taxes online and bill payments. It's going to let you even maybe pay vendors with better rates or different things. When we get into like Venmo and PayPal and things like that, having a business account is 100% the way to go, even though there is that merchant fee. It's just, again, for that protection. Same reason why you're in the LLC to begin with. Having business accounts for any merchant system is a no-brainer that way. And the merchant fees, like they do, like, right? We hate to have to pay any kind of fees, but it is just a way of doing business right now, right? In 2023, we're all working online, and I try and just think of it as like a non-issue, right? It's just part of doing business is we're going to have some of those merchant fees. So is it for a bank account? Is it required? No, as long as I guess you're using that account 100% for business.
Yeah.
For credit cards especially, it can be hard to get a credit card in your business name. And so for clients, I just always recommend, like, most people have more than one credit card, unfortunately, but just use one of those, stick a sticker on it or something, like now you have a business card, 100% for business, nothing else.
Yeah.
And that works well, especially for, I think, credit cards at the beginning stages of getting going.
Huh. Okay, so it's more about just separation and not
Yeah.
intermingling.
Yeah, for business or bank accounts and credit cards, yes, that separation. But again, for the merchant accounts, go business only for like Venmo, PayPal type thing.
Right. And I mean, like, I couldn't get, when I got a business loan back in 2019, something like that. I wouldn't have been able to get that business loan had I not had a business bank account. And
yeah, they kind of start to require stuff like that. And some, banks, the fees are way more, but I don't have many clients that pay over, $9 or so for a business account. And you can search for banks, if paying that monthly fee is something that just gets you, then I'd say just, switch banks or find a solution that way.
find like a community bank or a credit union or something like that. Typically those have better fees. But you do have to have like, going through the process of getting a business bank account is the most stressful, annoying process. It was almost up there with getting a house for me. I was like, I lost my letter from the IRS for my EIN number, and then I had to like call the IRS, get another one, and then I found it in a pile I was going to burn, and then like it was terrible.
Oh, that's too bad. Yeah, they do make you jump a few hoops for sure. And I think if you're switching or transitioning from a sole prop to an LLC, lots of people don't realize that you then go into your bank, let them know you just transition. They probably do that kind of switch a lot, and get your business account in your LLC name.
Yeah.
And I'm sure it's kind of enticing that, let's say you go to a studio to buy, 1,000 pounds of clay, and you're trying to expense $400, where if you're like, do I use my business debit card or do I use a credit card and get points and benefits? And then you just get like, I end up just using my debit card because it's like, how many points, and then am I going to remember to transfer it, and how do you account for it? It probably didn't look as good. You're just transferring money.
Yeah, I think sometimes, points are points, right? Lots of people kind of live by that. But I would say if you have a card like that you love the points, try and get a secondary card, at least even on that same account. That might be a good place to start. So you're still it's going to be separated on the bill. It might cause some havoc in like a QuickBooks Online where things are syncing into a system. But at least you have a statement that has that separated for whoever is doing your books or if you're doing them. And then at least you can still, collect some points too. I love to travel, so I get the points thing, for sure.
Yeah. And
sure.
Yeah.
you would still recommend having separate bank account, like even if it, like I have a consumer account for my sole prop. So even
Right.
if you're not an LLC, it's not like you should have a separate bank account once you are making a profit, I guess. Is like,
All right. No, I say right from the very beginning, and it's going to help you too, especially at the start if you're not outsourcing accounting duties because you're only selling so much or you only have 3 subscription expenses or whatever it is. You don't really need help sorting that stuff. At least you have your bank statement. That's the easiest thing to categorize. You know how much you made and how much you expense just from looking at that one statement for the month. So depending on your stage in business, it simplifies things a ton. I don't have many people come to me that haven't already been in business for a while, and they're coming to me like stressed out and usually tax season, and they're not like the happy, passionate entrepreneur they once were. But that's the biggest thing. If they've had that separated, we're not going and combing through 12 different accounts they used, and we're just using that one account. And even if you're not making enough to fund that account, put money into that account from whatever personal resource you're using, and then pay for it out of the business account or whatever account you're deeming as business. Just so again, the audit trail or the transactions are all in one place, makes it a lot easier.
Yeah, for
okay.
sure.
And
I
I
had
think,
some.
oh, sorry.
Go ahead and finish your thought.
I was just going to say the only other thing I can think of, like setting up an LLC, the next step or in that first period, I would say talk to your insurance agent and kind of get your insurance figured out. There's usually like I think it's like a BOP policy, business owner policy, where they consolidate a general liability, just to protect you from getting sued in the regular course of your business, and a commercial policy if you have a brick and mortar, or even if your homeowner's insurance doesn't cover you to store inventory in your garage, things like that. So I'd have a really like open conversation with the insurance agent of where you're storing product and how you're conducting business, and then they would be able to answer any of those kind of questions of what you need that way. But insurance is something that I wouldn't not look into. And then you can kind of add on policies as you need. So if you're using your vehicle, if you have an exclusive van or something for your business, it would 100% have to be a commercial policy. But if you're just using your own vehicle, they'd be able to advise you better on if you need some kind of commercial like add-on. And there's also e-commerce insurance, which I don't think many of my clients actually carry, but if you find that whatever marketplace you're using, has been hacked in the past, or has, has suffered downtime for whatever reasons, things out of your control, that type of insurance actually might kick in and make up for it if you're missing sales on Black Friday kind of thing. So that would be another policy to maybe ask about when you're setting up that.
Okay.
I
had a linked thought to what she just said about the vehicle.
So did I. Go.
You mentioned the policy thing, and I just bought a new vehicle for the business, but it's still like a personal car, and talked with the insurance person, and they were kind of like, hey, you're going to use this basically how you were already using your SUV before. So like, it's going to be better to just own the vehicle personally, insure the vehicle personally, because you're still, and then just deduct the miles. So that was where they were like, you're going to pay 3 times as much for a commercial policy.
Yeah.
It's a personal one. And
I would agree. It's usually
same way.
Much easier to have it all be yourself personally, and then on your income tax return, you're claiming like business use of that vehicle on there.
Okay. Sorry, I'm a hand raiser. So in that same line, like I have a vehicle, but it is the only vehicle I have, and I use it exclusively for business. I also live in it, and I live in a van. It's not like I'm homeless. I am homeless, but not really.
It's a brand new Dodge ProMaster, so it's a nice van.
Nice.
Yeah, so I just bought this van, and I put like a bunch of money down on that. and it's just got like regular full coverage, like would it be in my best interest as it being my only vehicle to be commercial, or would it be better to be like individual?
I would say if it's like a van that you live in, like it's still, there's gonna be like a portion that's deductible and a portion maybe that's not. Like I'd have to kind of look into that more, but I would say you're living in it, so every single thing you do in there isn't for business. You're, also sleeping there and that kind of thing. So I would, off the top of my head, treat it the same as I would as a house. And you would be collecting all your expenses that you can deduct and then applying the percentage, even if it's a very high number, because it's pretty much all used for business, to that.
Yeah, I mean,
Or would
all the storage under my bed is business.
like how do you handle miles for something like that? Because there's not a permanent residence. So how do you say from point A to point B, or like I'm in this city visiting this person, but now I'm traveling to this city to do this show?
Those are all business miles because I'm going from point A to point B, traveling to see them for business.
So every mile that you drive is business miles. Is that right? Like, I don't know. That seems like a gray area. Like, I don't know.
Yeah, no, it can be tough. I would say, like with the vehicles, they have the two ways that you go by just your miles, or you go by the actual expenses. And so if you are living in the business vehicle per se, it might be easier to go by the actual expenses, but you're still, like you said, tracking your mileage. Lots of my clients use like Mile IQ is a good app. And so I think every time that you're driving, you could potentially like say what it's for. But yeah, there is gray area there. I think as long as, if you're claiming 100% use of that vehicle, that would be more, not a red flag if it's true, but just something that would raise more attention than if it was a lower percentage, because most people are just splitting between, they're driving family around or kids around or getting groceries. And so it's not always going to be 100% business, but yeah, that is a different scenario.
Wow. Okay. And the typical expenses for your vehicle would include like car insurance and gas and maintenance and your vehicle payment?
Not the actual payment, but if you have financed, it's the interest that you can claim. And if you lease the vehicle, that can be included. So that's the difference with lease and financing. I recently had a question. Someone like went through this period of time getting all these parking tickets or something, and then they had like a speeding ticket, and they were wondering like, is that tax deductible? And that is not. So you wouldn't be able to include any of that in.
Man, they must have been grasping for straws there, huh?
Yeah. I'm slowly getting in the dark here. I didn't turn my loft lights on. You let me know if you want me to run and turn those on.
Oh, that's okay. I did that the last podcast, so I had to be like, oh, turn your light on.
Yeah, I didn't think ahead here. I was going by my windows.
Oh, that's great.
You're fine right now. Yeah, that's interesting. Okay, so I just want to repeat this again. So if you own the vehicle and are paying payments, the interest payment is deductible. No.
Right. Interest only can be included in that total actual expenses, and then you would apply the percentage of what you're using for business.
Okay. And then if you're leasing, what was deductible for leasing?
Your lease payment can be included in those expenses.
Oh, interesting. So you should lease.
Well, I mean, there's downsides of leasing too, right? So, so it would depend, but some people do like to lease and have an extra deduction. I think too, as we get closer to tax season and we're all into deductions and paying, the least amount of tax that we can, I always try to remind people too to kind of keep the end in mind. And I have people that claim, as much as they can, legit expenses, and then they go to apply for a mortgage, or they need a business loan, or they need something, and they realize like, oh, I shouldn't have maybe been as aggressive trying to find all these expenses to deduct because I need my net income to be higher to be approved for things. So something to keep in mind if you're thinking of buying something in the next 2 years or something. It's usually 2 years of returns, where they are really analyzing those numbers. So just something to keep in mind when we talk about deductions is we can get like hyper focused on it, but also stay aware of what your plans might be over the next couple years, so you can show enough income, and that's a juggling act that every entrepreneur struggles with, right? Because we're trying to control how much tax we pay, but also, be eligible to live and buy things that we need. So, yeah.
Yeah, I pay myself weekly now because it just works better for me. I just pay myself a weekly like income, as you will. And I've been like thinking about tax season and how I'm completely fucked. Like because and it was like a total choice that I did, and I know what I did and why I did it, but I'm like, ugh, like there's a lot less to deduct, because of that. But it's okay. It's fine.
Yeah, I mean, I think it ebbs and flows for everyone, for sure, right? And you'll have years where there's a growth phase. There's just so many deductions and advertising or this and that, or travel, the trade shows and things you're trying out. And then there'll be years where there's not.
Yeah, for sure.
Since we're kind of on paying yourself, what is the difference in paying yourself between the different entities that we talked about, the sole prop, LLC, S corp? You kind of mentioned the S corp a little bit, but
yeah, no, it can be confusing for people, for sure. So when you're a sole prop or just a single member LLC, you're taking draws out of the company, and they may not even be consistent. I always recommend trying to keep them, like you said, you're paying weekly. That's awesome. Some people I suggest people start doing it of like when income comes in, if it is sporadic, making a split at that moment. So at least you are paying yourself, because otherwise you can get busy paying other things and then there's nothing left for you to pay or draw from the company. So those type of transactions where you're just drawing money out, it's not deducting your income tax. It's not affecting your tax at all. It's not touching that net income number. It's equity. It's on your balance sheet, a whole different financial statement. But if you are a S corp and that's where you legally have to be set up as an employee yourself, that does affect how much taxes the company or your net income in the company, because it is, a deduction on that profit and loss statement. So as an S corp, you have to be set up as an employee, which means your company has to be set up as an employer. You'd go back to that state website and register yourself as an employer, and you are responsible for remitting those payroll taxes every month. So yeah, that's kind of the main difference, is you're either payroll or you're not. As an S corp, you can kind of do a combo of both. You can take draws, but you do have to have a reasonable salary coming out within the business consistently, monthly, that kind of thing.
I could be an S corp.
Pardon?
I could be an S corp.
Well, there you go. You're being consistent.
But
you don't want to deal with that paperwork, right?
Yeah, no.
So and when you're paying yourself sole prop or single LLC, it's not changing your home, like your total taxable income. Like it's all, the business is all part of you, right? So it's all like part of your net income for the year. Is that right? It's not, because you're paying yourself, it's not like additional income that you personally made, because the business income is still your income.
With the S corp, no. So
with a single sole prop in the LLC, is that
right? So with either, like when you fill out your LLC and you input all your revenue and then you input all the deductions and come up with that net income number, that is what you report on your personal tax return and what you'd be paying tax on, that bottom net income, taxable net income number. The only thing is with an S corp, if you're paying yourself as an employee, you can increase your salary, which would increase an expense in your company, and that would decrease that net income number then for your taxes. So that can have an effect on your taxable net income that's reported, while if you're just taking draws from the company as a sole prop, that doesn't touch that income statement. So you can't really affect how much tax you pay by changing those draws.
Okay.
If that makes sense. Yeah.
Yeah, I was
Yeah.
thinking to the, like, I have a full-time job as well as the pottery business, but I'm like, if I take more money out of the pottery business, it's not necessarily changing my tax bracket or something like that, because the business is
No.
still the profit of the whole business, whether I pay myself the money or not, doesn't matter because I own all the money at the end of the year.
Yeah, so you'd still be reporting all your revenue and all of those expenses, coming up with the same net income regardless of what you drew out of the company. It's not what you draw out as a sole prop is not listed with like advertising and bank fees and all of your expense deductions. It's not even on that statement.
Okay.
That's right.
Gotcha.
Yeah.
Yes.
You got a next question, thought on the
You're
list?
up.
I've been asking all the questions.
Have you? Oh,
Uh-huh.
I did have one to make sure I don't forget about, similar to LLC, about like the distinction. Like, are there certain things or that you would be doing? I put some like considerations, as in, are there other people coming into your space? Are you teaching? Is it about equipment coverage? Is it about like insurance reasons or vehicle? Like, what are some of those differentiators where you're like, you know what, I should probably be an LLC? Not.
Yeah, I would say mostly like if you're, I feel like a lot of creators are like at home. Am I right with thinking that? Yeah. So having people in your space, I would say more affects you for insurance reasons, and it may also affect you for like state licensing, like just your business licensing. And so I can send you a good link there as well that just shows every state, because of course every state and county and city has different rules for that. But I think those would be the main two, that how you conduct business in the space would affect more than if you are an LLC or a sole prop.
Okay.
Other than like that liability, that you get some more coverage within a LLC, but I would say it's more so affecting your insurance policy as well. And if you're sharing space, having people in, your general liability insurance is probably going to increase or be more relevant.
Okay, so there's a differentiation, but like the liability insurance is separate from the business liability LLC kind of distinction.
Yeah, LLC, like you're more so a legal entity at that time, so there is some separation between you and the company. While in a sole prop, you're just personally liable for everything. In an LLC, it is, separate. The company has a name. It's more a legal structure registered with the state. So yeah, that's
Okay.
So to like explain further, correct me if I'm wrong, but like let's say somebody cuts their lip on a cup and they sue me. If I'm a sole proprietor, they're suing me. If I'm an LLC and I have all of my finances separated, they sue the company, correct?
Yes. The thing with that is, as like a single member LLC, you only have so much liability coverage that way, because you're, personally a guarantor of probably everything that you own anyways. So that would be something you would check with insurance covering that person that's suing you. I think a lot of that's where the general liability policy would kick in, as well as maybe just with a lawyer as well, with some contracts or that kind of thing. We'd have to touch base for sure on the legal side.
Sweet. Okay. I had one. There was a question in here that I read that was really, really good. What pitfalls do you see small businesses have that lead to their businesses failing or not set up for the long term?
Yeah, that's a good one. I feel like it's kind of like a tough one, right? Because it is hard starting a business and getting out there and keeping everything afloat, but it always seems to come down to cash flow. So not knowing your numbers, or just kind of like running blind, being kind of the hamster in the wheel trying to make sales only, is going to be hard long term if you're not aware of low seasons and how much you need to get through. Pitfalls, I guess, would be that, like running blindfolded and not knowing the cost of each product you make, the profit that you're making on each item, because otherwise there's just no way to know how many mugs you need to sell in order to break even or to pull a profit. And I guess another advice that I would give is not to take on debt without a really structured repayment strategy. Because I do see that people get offered like a line of credit and they kind of run wild with that, feeling like that's their cash flow forever. And so I would only say, I mean, it can be very seasonal in creative businesses depending on holidays and different times of year. So being able to cover yourself through a line of credit in the low season is excellent, but the repayment has to be in the high season. So you're ending at zero to go into your low season again, kind of thing. So I think that is one area that people can really get into trouble with, and not using that line of credit or that loan for anything that's not profit earning, so it can be, you want to redecorate your office, you want to do this or that wouldn't be something, those are profit type items that I wouldn't purchase with that. It would be things like your kiln you need to replace, or you need more supplies for orders, or things like that you can then pay off in the high season.
Okay, so like purchasing, I could see where there are big ticket equipment items that people could buy that they're like, should I have the cash to pay for this, or should I do a credit thing where maybe I pay $2,000 for a kiln and it's like, this is going to last me my lifetime. But if you don't have the cash flow to pay that, and actually like, you're like, oh, well, it will eventually pay itself off. But if you can't like have a valid.
Yeah, I think if you're financing, like a kiln would be like, you'd need that to even have this business, right? So it's almost like a startup cost that then can become, an emergency type of purchase if something were to go wrong with your equipment, would put you out of business or out of being able to create the items. So for something like that, if you're financing that or putting it on a line of credit, that might be something you just have to do in order to keep doing business. And that would be fine. I would just have in mind a way to pay it back before, or knowing your sales or that kind of thing to be able to justify any kind of big purchase like that. But yeah.
Do you have to deduct that expense a certain way if it's that big of a purchase?
Yeah, if it's a large purchase, any large assets would be considered like capital assets or fixed assets. You might have used those terms on your tax return. And so basically they're depreciated over time. So instead of being able to write off that $2,000 all at once, it's going to be a little piece of it throughout the next few years. So in your books or with your accountant or whatever, they're going to probably inquire about that purchase and set it aside. And for taxes, it's treated a little differently.
Okay.
Yeah.
God, what was I had a question. Oh, I was going to say that I found out recently that Square, which a lot of us use, has an ability in their system to set aside a certain percentage of your sales. So instead of like, and I think it's a fairly high yield savings account. So like, I don't know if you'd recommend this or not, but I just found it. And so now I've been like setting aside 10% of my sales every time. And I think that would probably be a really good solution if you did have to pay back a loan of some sort, to use Square as that avenue. If you are not good at saving, just make them do it for you.
Right. It's kind of that idea of like, as income comes in, as payments come in, splitting them up immediately. So if you're using Square and you want to do it that way, I think that would be fine. A fine way to just separate that out. And then the same thing, pay yourself a certain percentage, save for taxes a certain percentage. And what's left is, your operating expenses of what you can spend, I guess, for the rest of that time.
Sweet.
Yeah, I've seen that. And I think you can have like multiple accounts. Yeah. I did have one client that had like everything kind of laid out there. And in that case, I would say every account that you're creating is like another account like within the business that needs to be reconciled and that kind of thing. So if you do want to do that, some of those might be considered like draws to yourself, and you're using that as a personal savings for your trip to Hawaii, or that kind of thing. So I would only have business accounts that is like to save for taxes and to save for the kiln payment, not necessarily like every compartment, but you could do that for your personal life, and that is awesome, right? A way to kind of compartmentalize savings and making sure it happens.
Yeah.
Nice.
P.S. You look fine. I just wanted to let you know.
You can
in the dark.
You can fix the light.
Fast?
You can fix the light here in a moment, because Becca, this
go fix it.
It's gonna help me when I have to buy my new kiln here in a couple months. So I'm getting an L&L kiln.
Yes.
We talked about L&L recently. Jamie doesn't know anything about kilns. We just introduced her to what kilns are all about, but
yeah,
these are big pieces of equipment. You might be in the market for one. We've been talking about the element channels lately and how easy it is to replace your elements. So also, elements are a big expense. Make sure you're deducting those.
Yeah, and also as she had said before, once you buy your L&L kiln, you're going to not write that whole thing off, but you are going to talk to your accountant about taking off a certain percentage every year as it depreciates over time. Also, I remember when I bought a kiln a long, long time ago, I don't think that they have like a mechanical waiver or something like that, and I didn't have to pay tax on it. And I don't know if this was a long time ago, so if it was wrong, it was okay. But like, I'm pretty sure I didn't have to pay tax on that specific item because it was like, at least in Washington, I was like viewed as like a mechanical production facility. So the kiln was a piece of equipment for that facility.
It's not like a reseller permit kind of thing where you're like, I am using this thing to make money, so I don't need to pay sales tax, because the person's ultimately going to be paying sales tax on the things that are coming out of this thing. Like, it's not like that.
No, it was like a mechanics. I don't know. Anyway,
you're a mechanic, Becca.
Where are you going to get your kiln, Ryan?
You're going to find it at hotkilns.com.
Boom. Okay. Anyway, back to our normal programming.
Jamie, there is light again.
I know. Light. I was just starting to look like a horror film there for a second.
You looked great.
Looks great, yeah.
I'm just moving in, so it's so empty and echoey in here, but
that's my favorite time of the house. My favorite time of a house is when you just move in and nothing's on the floors, and like it's just like nothing.
There's so much potential, right?
So,
right? Yes. Yeah.
So much potential.
Right.
While we're kind of go ahead.
I want to before this should be a quick question. Could you just explain what reconciling is for the people that don't know?
Like of course. So reconciling would refer to basically checking off all the transactions that are happening in your accounting software with your actual bank statement. So we're reconciling that all of the revenue has been included and all of the expenses have been included. And that's important because sometimes in these accounting softwares can be amazing. But if you had a syncing issue sometime in the month and some revenue didn't even come in or populate in the system, you could be, under or over on that reconciliation. So making sure that you reconcile to a bank statement, or if you're doing things like by a spreadsheet, using your actual bank statement to then enter information and checking it off as you go, you're basically reconciling there. You're taking it back to the actual sheets and reconciling the balance.
And what, I know that you said you normally work with QuickBooks. Are there any, is it like, are you pretty much like a diehard QuickBooks fan, or are there other programs, I guess, that you know of that are maybe a little bit less expensive than QuickBooks that you would recommend, or like kind of what's your opinion on those?
Yeah, like, well, my accounting firm, we're exclusive QuickBooks Online, so I guess we're diehards. We're chugging the Kool-Aid on the Intuit QuickBooks Online, but I use it because it really could help or work with any client, no matter the size, if you're starting out or if you are a multi-million-dollar type of company. So I like the flexibility of it. You can start payroll within it, but they are all a lot alike. So there's people that only use Wave or only use another program, and that's fine. But most firms are going to stick to one, because then they train all their staff in that one, and you really, get used to using it and supporting clients with it. So I do love QuickBooks Online, but that reminds me, lots of times people will, start up their LLC or start up their company, but they're still in QuickBooks self-employed. And that's like a version of QuickBooks. And so I would make sure that you're in QuickBooks Online, not self-employed, especially if you are an actual business setup and it's not just like a hobby that you're kind of using randomly, because you have access to financial statements and more accessibility to things that you will need in the company. So I do a lot of transfers between self-employed over to online, and unfortunately they shouldn't call it self-employed. It's it's confusing, but
who is
they do.
that meant for generally, like self-employed? Is that supposed to be like a TurboTax, like light, like the first paid version?
It would be
sort
like
of
for freelancers, like that they're not, maybe like what you consider more like a hobbyist, that's not really in business, doesn't have an LLC, and doesn't want to, kind of thing, isn't growing the company. I would say it could work for a freelancer who's just popping in some income and expenses and that kind of thing. Definitely, like if you don't have a separation of personal and business, that could work for someone like that. You're going through and just marking things as like business or personal. But yeah, I generally don't like that version at all, and we just wouldn't use it for any of our clients. We need to have like actual accounting software. So that's something to.
Oh, sorry. Yeah, QuickBooks Self-Employed, originally when it came out, it was like, it like got a bunch of people because it integrates with Etsy. And that's where it like pulled a bunch of people in. And then like I did the test for like a week, and I was like, this is not okay. This is, so yeah, if it integrates with Etsy, you're not in the right place. So
yeah, I think with any, like I work with a lot of photographers, wedding planners as well, and so whatever CRM system they use, Honeybooks or whatever, 17 Hats, they always are going to have that integration as an option. So that's great you mentioned that. And 99% of the time, I would say not to integrate that invoicing system or your merchant system with QuickBooks. So very rarely, other than maybe with Square or PayPal, depending on your type of company. But I would probably check with somebody that's setting up your QuickBooks, so they can help you navigate that. Oftentimes there's like third-party apps that are needed to have things come in correctly. So yeah, that's a good point. I would make sure you kind of have that set up correctly before just letting the two talk to each other.
Yeah, I had to fix a QuickBooks situation from integration, and it was the least fun thing I've ever done in my life.
Really? Yeah.
It was terrible. Yeah. Okay, Ryan, what are you thinking?
Okay, so I just wrote something down because I'm in a situation. So all of these merchants now, and maybe it's just the U.S. government thing of like declaring when you need to get 1099s because you break 600. So I found that I'm getting 1099s from left, right, center, out and left. Like I get an Etsy one, I get one from Square, I get one from the place I teach at, I get one from wherever. So how do you keep that organized with all of your income for the year? I'm guessing if like I keep track of all my income, so I know the total number, and then do I just need to subtract all the 1099s from that, and then say like from here's my 10, like
right. Yeah, no, you don't need to
that?
subtract them. They're more so, a requirement. It sounds like you are already declaring your revenue, which is great. But they're more so to just make sure that contractors are declaring their revenue. on their taxes. So if you have books set up and you're already including all of that revenue coming in, that's great. When you go to then have your taxes prepared, you can provide those 1099s, and you should provide them to the tax preparer, but you would just let them know, like, this is my accounting or this is my financial statement, and it includes all of that revenue. So I think just making sure whoever's filing knows that, because sometimes people aren't doing their books, right? And they're just collecting those 1099s and saying, that's my revenue. And then just tracking their expenses.
That's all of their revenue, because if they get 1099 or not, they're not.
As their way to track the revenue, which I don't recommend at all, because you're just trusting like somebody else's bookkeeper that they did that right. It's best to, back to the bank statement or the business accounts, have it all come into one account so you know how much. I don't want any of my clients like relying on someone else to tell them how much that they made in the year. These are things that we should know in our own company. So yeah, that's a good question. That's how you'd handle it. You'd still submit the 1099s to your tax preparer, but you would let them know it's all included in your spreadsheet or in your accounting software, or however you're recording.
Okay. And because you, on the expense side, on the income side, you're just giving like a number generally. You're not splitting it out like the expense side, where you're saying the expenses came from these categories. Like, you're not saying all the categories. And
internally in your books, you can have revenue streams like as specific as you need, right, for tracking your profit margins and things. But on your actual tax return, it will just be one line of revenue.
Yeah. So recently with my 1099s, I feel like I got a few of them. I am on it. I'm going to be honest, I didn't read it all the way, but I feel like the IRS did something recently that was like changed the limit from 600 to like 20,000 or something. Am I punching out of left field, or is that something that did happen?
It did and it didn't. So 1099 NECs is what you would be sending out if you have contractors or an assistant that helps you, and that is still the $600 limit. The 1099Ks, 1099 miscellaneous forms that go out through PayPal and those merchant systems, those are the limits that changed. And I don't have that number on the top of my head what they did, but yes, they did change those limits, and they're pretty much like just trying to crack down, I guess, on people not reporting income. But there is a separate 1099 when you're just paying someone, for contractor work or help at events and stuff like that.
So the limit is okay. So the limit, because I heard something, they pulled it at the 11th hour or something. They were like, oh, we're not ready to issue 1099s for everybody, for all these merchants. Because I think I got something from Venmo or PayPal that was like, by the way, we're not going to send you one, even though.
Yeah, I think they wanted to, and then if it was the software or something wasn't ready to kind of put that in place or police it, kind of thing. So there was definitely a mix up there with how they rolled out that change.
Like a scare tactic for everybody.
Maybe.
All right, let's get off of these.
Yeah. Who knows? Yeah. Yes, for sure.
Okay, I got a good one. It's we're flipping the script a little bit, but this one is how to keep track of inventory at the end of the year. Not necessarily how, but is it important? Do you have to report it? Like, what's especially with, in the ceramics industry, we have like a lot of dry materials. We have, maybe stuff that hasn't been fired, clay. Is that stuff that we need to worry about? As if we're like, let's say we're under 100,000 a year type of business, is that something you need to worry about?
I would definitely say that like an annual inventory account of inventory available, either for your online stock or if you have, a store stock or something that's separate from online, would be something you would need, because on your balance sheet, that's where you're recording that inventory value. So at the end of the year, your accountant should be inquiring to any product-based business, what is the inventory value, so they can make an adjustment. So I would say that if you have products in like the tens to hundreds of items, doing a count at year end, although, you know, kind of painful, is still doable. If you're someone that has like warehouses full of stock or thousands and thousands or different SKUs and that kind of thing within the company, that's where actually having like a POS system of some kind, or you can see some really crazy spreadsheets get built. But then it is much more important as well to have that, because you would need a way to track like breakage and theft and that kind of thing, depending on what kind of storefront that you have. So inventory, it is kind of one of those tedious things, but knowing how much you have at certain points in the year, or if you do have a lot of different stock, at least doing like cyclical type of counts. So every quarter you're focusing on a certain type of inventory. I do have a few artists that do that, that kind of dabble in pottery, and then they are also a painter or something. So they do keep it separate, and they try and track that throughout the year. So at year end, they can give me an update.
So if that's like a real example, we hit January 1st. Are you counting the value? So we're talking like value of what you paid for the clay boxes that you still have that haven't been opened. You're valuing the raw materials you have that you paid for that are not mixed into glaze yet. You're counting all the glazes that you have, all the pieces that are sitting on shelves. Like,
I would
how do you do that?
Yeah, I would say definitely just start with inventory available for sale. So that raw materials, usually your accounting team is going to be expensing that already to like a cost of goods sold. And then once they know the inventory available, they'll do that adjustment. And some of that expense is going to come back out to your balance sheet. So I would focus first on just inventory available, and it would be like the cost of that item, not the retail value. And I would supply them with that number first.
That's
and
a nightmare. Plus you got to know the cost of what your actual, like the raw material cost. What is the value of this just in raw materials before you even put a price tag on it and sell it retail?
Right, like that would be just knowing how much you're profiting on each mug or each item that you sell, which can be hard, can be, it must change, Yep.
We've done the podcast, Ryan. What episode? It's like episode 12.
What does a mug cost? Yeah.
What is
that sounds like a nightmare.
It is a nightmare.
So what is that? What does itemizing that and keeping track of that, does that just look less suspicious? Because if you have a bunch of inventory at the end of the year sitting on shelves, and you come into the year but you don't sell anything, well, does it look suspicious because you shouldn't be able to sell anything January if you sold everything in December? Is that kind of the way that looks on paper that it looks?
No, it's so that you can pay taxes on what you have in your house.
I don't know if I know your question, Ryan. What do you mean? The inventory,
It sounds like you're trying to declare what inventory you still have on hand at the end of the year?
Right. So it's more or less if you are purchasing things to make this inventory and you are expensing it all, at the end of the year, you might have $1,000 of inventory available for sale in mugs sitting there. And so it's not a cost of goods sold yet. It's not sold. It's sitting there in your room. So you want to create an adjustment where we're increasing inventory up to 1,000 and decreasing the expenses for cost of goods sold because they're not gone yet, right? So it's just an adjustment basically at year end.
It's limbo. It's limbo for the mugs. So like, okay, you've paid all the money for your
I'm trying to decide, is it going to increase your expense or your inventory, like your income? Like, what's it adjusting?
Decrease your expenses. Yeah.
Okay.
So and the reason why you would do it is because they're still sitting there. Like those raw materials are in mug form, but they're still sitting there. And so we can't expense it all as a cost of goods sold because you didn't sell them, kind of thing.
Okay.
You don't reset every year. So that reset says like, hey, you didn't actually sell all the things that you said you were going to sell with all of these products that you bought. Because when you buy those products, you need to sell those by the end of the year, or else you need to tell them, hey, didn't sell these ones. There's $1,000 left. So you got to take that off of my expenses. and even it out.
That's so confusing to me.
It
I
is.
guess it's just because the pieces are so in flight that
Right.
I mean, there are a lot of people that like, I'm only going to sell everything until I'm sold out, and then I have an empty shelf in January. But like, I don't know. It's just so confusing.
Yeah, I mean, it would just be like like a clothing store or anything like that, like whatever they've purchased, any kind of inventory business that has products, you've purchased so much to resell, and you can't expense it all because it's still in the store ready to be sold. So at the end of the year, you do that inventory count so you have an idea of what's left. And that's just the adjustment they make to beginning inventory, ending inventory kind of thing.
And then that inventory or that expense is going to come on the next year when you do
as
sell
it's
the item.
sold, you have a cost of goods sold happening. Yeah. And
Okay.
so in a POS system, point of sale, if you have, again, the SKUs and thousands of products and that kind of thing, that adjustment happens each and every time there's a sale. But when we aren't, huge companies, we're not going to have a POS system to do that each and every time you sell a mug or something. And so that's why this adjustment is a little bit more manual.
Can you also talk about the difference between a cost of goods sold and just a regular expense, and why we need to separate those? I mean, it kind of goes with what we've been talking about, but why we should separate those out?
Yeah, for sure. So cost of goods sold would be any type of material or supply that you need to actually make the item, which is more or less a little bit more clear when you're actually making a product, right? Because it's what goes into it. So your clay and all of those type of supplies. It would also be if you have a contractor, that really anything, if your business is running, it requires those items. While your operating expenses, on the other hand, you will still have your rent, you will still have your storage unit, you will still have warehousing costs or whatever. Those would continue if your doors are open or not, kind of thing. So those are considered operating expenses. That's your advertising, bank fees, dues and subscriptions, all the rest. And your cost of goods sold is that the cost of what you're making.
Yeah.
Those
So
supplies.
so like if you're buying, I think specifically for like potters, if you're buying supplies that you're not going to be selling, those are in a different category than cost of goods sold. So like if you're buying a fettling
office supply or
supply or something like that, that needs to be in a separate category at the end of the year.
Yeah, because that's going to help you track profit margin, right? So if you take total of what came in minus those cost of goods sold, what's left is a gross margin or gross profit. And that helps you know how profitable selling those items was without integrating all the extra operating expenses in there. Yeah.
Yeah.
Yes, so much to
I
know.
think
right?
I generally, when it comes to tax time, I leave that cost of goods sold empty. Like,
yeah, I would say
like that
just
thing is
split
empty
out.
to me. I never understood the cost of goods sold thing and like why you needed to break it down that granular, because ultimately I'm going to end up selling the thing next year. But I mean, I guess if you want more profit, maybe, because it's going to, but I don't know. It's going to net out next year.
It won't affect the very bottom line, right? Because you're still taking all of your revenue minus all of your expenses. But separating that out lets you know how much profit there is before all of those operating expenses. So within your Schedule C, you'd be able to kind of enter the materials line at least in there, and that would be like your clay or tools, those type of supplies that are used up, and you could input them there without affecting basically that bottom line.
Okay.
Yeah.
My mind's a pretzel right now.
You're not convinced, I can tell.
It just sounds like so much complicated that I don't understand why. This, I don't know if this is a thing that like scares people away from making profit because they have to go down this road of taking it seriously to do all of these things, and it's like, oh, that's so much work. I mean, I get it.
I think that it also like it points out the fact that owning a business is a real responsibility, like
It is, yeah.
it's not like, hey, this week I'm going to start a business and it's just going to be that. Like you actually do have to do the research and you have to know the things to do it correctly. And I think that that's the biggest thing for me that I see from all of this stuff. I mean, like I had to learn all this stuff from other businesses and stuff like that, but you have to take it really responsibly,
Yeah, I think we like, especially maybe our generation and younger people as well, like we don't want a boss and we want our own business, and it's like that idea that we love about it, but then you have to become the boss, right? Like you have to know the things it takes to run the business, which can be stressful because we didn't like particularly learn that. I think that's the biggest kind of panic mode people are in, that like, we didn't learn this in school, my parents didn't teach me, I didn't know how to run a business, but that's all normal. And I think just finding a place that you can get some answers and some, a resource to answer questions for you is key. And like you said, you learn a lot just through experience and working with peers and that kind of thing as well. Online sales can be, definitely add some trickiness to the mix with sales tax and that kind of thing as well. And so it's not easy even for huge companies with full-time accountants and things like that. So knowing that going in should provide some kind of relief, I guess. You're not alone in that you didn't know that you have to collect sales tax in multiple states or things like that.
Yeah, that was gonna be my next question.
Oh yeah, my next question. You segued really well.
Did I? Yeah,
it's like you
always,
knew
that's
it.
like one
It's
of the
like
most stressful things, I think, for small business owners is that one.
So if, like, I sell on Etsy, I'm like out of sight, out of mind, because Etsy takes care of all of that for me.
Mm-hmm.
They pay it and they remit it, and it's out of my hands. But if you're on other platforms like Shopify or Squarespace or whatever, you have to deal with that. How do you tell people to approach that? They sell online, and where do they collect sales tax? How do they pay it?
Yeah, so it can be tricky. It basically comes down to what they call, do you have sales tax nexus in that state? So it can be normal to have to remit and pay or collect and remit sales tax in multiple places. And it comes down to, if you basically, nexus is a fancy way of just saying significant connection to that place. So of course, wherever we're all sitting and making the product, that's your home-based nexus. You have to remit if your state requires it. And then there's certain things that I feel like people might even accidentally be doing that don't even know that creates nexus in other states. So we could run through a few of those that I see more commonly, but I think finding a resource, if, like you said, Etsy kind of handles it. TaxJar, I don't know. I can send you that link as well, but they're an amazing resource. And they also have just contractors that I think set up your Shopify account for that, because I think that's the biggest thing. If you leave your settings open, they're going to just be collecting in all these states that you're not even registered in, which is complicated. You don't want to ever collect any kind of sales tax in places that you're not actually remitting it to, but that physical presence, so where you're sitting, is one. Probably not as relevant, but personnel. So if you have employees or contractors or like boots on the ground in that state, that can create sales tax nexus and make you eligible there. Other ones would be affiliates. I feel like that's a new way they're kind of going about it. If you're affiliated with stores that are promoting your product and in other states, and you're like paying them for that, that can elicit or create kind of a nexus connection.
Was that like a consignment or like a gallery that you're selling out of?
It could be affiliates. I mean, it's kind of probably a large group, but it would be any kind of stores, or like you said, promotional pieces that are used that are creating sales for you. So yeah, consignment, I don't think really, but if they are sending people to your shop, basically, right?
I see.
Yeah.
So if they're like,
affiliate
hey,
sales.
go to this shop, we love them, then that would be
Oh, they're kind of like an
Yeah, and
extension of your advertising, sort of.
Right. It kind of ties into of like inventory. I feel like if you are storing inventory in a warehouse in another state, that definitely can create that physical presence or connection. And that sometimes that happens where I think people stock their stuff at someone else's store in that state, and then that can create that as well. And then there's also a temporarily like doing business, which affects people that go to a lot of trade shows and conventions and things like that. And
Yeah.
again, depending on the state, they can either take that as you have to collect sales tax and remit it for the entire year, so you have nexus, or they will take it as like, no, you don't have nexus, you just go to this trade show once a year. So that's where, again, that state website, knowing your state website is kind of key in getting that, or hiring a consultant from TaxJar, or checking out their blog by state would be key. To just kind of make sure you're not checking those boxes. But sometimes you are, and your business is growing, and that's not a bad thing either, right? It's fine to collect sales tax in multiple places and remit it. You just have to be organized enough and have that accounting system in place to do it. And so they'd be able to kind of sort you out with that. But if you did need to, you'd go to that state's website, register for a sales tax number, and you would just start collecting sales tax when you sell there and remitting it, usually quarterly or monthly, depending on the volume of sales. So it's not necessarily something to be like worried about. It's more so just knowing if you need to or not would be the thing. Mm-hmm.
Okay. So let's say we're gonna do like a kind of specific situation, and I'm hoping that you can answer this, but if you can't, that's fine. So let's say somebody's selling, like I live in Indiana, right? So somebody's selling from Indiana, and they're selling less than $100,000 a year to different states. Like I do an update and I sell $3,000 and it goes to all the different states. In that situation, according to Indiana's like taxes, would I pay sales tax to those other states, or would I just say, hey, this was an exemption on my tax sales tax remittance at the end of the month?
That you're saying are an exemption, like out of state sales?
Yeah, out of state sales.
Yeah. So I'm not going to give you a good answer on this one. But mainly because it would depend on how much you're doing in each of those states. So whatever software you're using, you'd have to see if you're doing a ton of sales in California, you're going to go see if you meet the limits of sales in that state. And like I said, it's a real pain because they're all different. So if you sold one mug in North Dakota, I wouldn't probably worry about that. But if you're doing sales consistently in a certain state, that's where I would definitely say look up that state's limits, and they're all going to have different limits, and then you would be able to know if you need to or not, or that would be the place to start, I guess, with doing that. And then how you're filing on that Indiana return sounds correct. How you explained it, that those would be considered out of state, so they're not affecting your Indiana sales tax report. But that doesn't mean that you shouldn't be filing in California and New York and whatever.
And then when you would file in a different state, you would still say how much you made. Like if I made $1,000 in a month, and I was remitting, and I was from Indiana, and let's say I had to remit in Washington, God forbid, because then I'd have to do all the counties. And if I was doing it in Washington, I would still say, hey, I made $1,000, but flip it and say 900 of these are out of state and 100 of these are in state. Right?
Usually not. So you would have to make sure and read carefully. I always would say pull up the instruction form as well, because it's going to tell you if it's like your not your worldwide income, but your US income that has to be reported, and then how much you collected. So on some of the forms, they will require the total, like you said, exactly as you said, and some they're not. And if you put that total 1,000 in and only collected this month, you're going to get the letter of like, why didn't you collect enough tax in that state or something? So that is where I would say, if you're someone that's selling on those other systems, online stores, it's worth the investment to have a tax jar type consultant go in, set it up, let you know which places you need to be already enrolled in, and you would just have a online access just like you would, or an online account just like you would in your home state at those places to file. But yeah, it gets complicated and overly tricky, but I know the reason why states are cracking down is because sales tax is how they make most of the revenue, right, for each state. And so that's why they, as online sales become this huge thing, they're getting really picky about making sure they get their piece.
Do you know if there is, I'm looking on Google right now, and I'm wondering if there is a Nexus guide that you would recommend, or if you know of that you would recommend?
Yeah, I'll send you the link. TaxStar has a good one that's just by state. So you can literally just like click on your state and get a ton of info. I know I have that saved here for this. So yeah, I'll forward that. That would be good.
Okay. And I would suspect that some of these third-party merchants like Shopify might have a version of their level of plan that you pay for that does that analysis for you, knows where you need to report, and then they would pay those taxes for you and remit them like Etsy would? Or is that overly optimistic?
Yeah, I don't think Shopify does. I think they leave it on the seller.
They do.
As far as I know. Yeah.
They do. I think that Etsy's like the only one that's like, hey, we'll do all the things for you.
That's a big draw for Etsy because
it's huge. It's a huge.
Another pretzel is my. And then you mentioned, Becca, you mentioned something about the sales tax you're paying to the state. When I'm selling in another, so let's say I go to whatever, maybe the online thing is more relevant. So I sell online to some other state. I still don't like mark my, like when I do my Kentucky sales tax, I'm only listing income that I sold in Kentucky on that like taxable sales. I'm not listing it when I pay the sales tax. I might list it as my like income tax estimate, but I'm not listing it as like taxable sales. Is that not the right way to do it?
Yeah, so that's where I would make sure that it is supposed to be only your Kentucky tax or gross sales that are coming in. I would say usually that is the case for all sales tax, and you would just be doing that in multiple states if you needed to.
Right.
I think you were just meaning sometimes they ask for your total. Is that what you were meaning?
Becca mentioned something about exempting sales, but I was like, you just wouldn't include them as your gross sales in that state. Because that's
where I would just confirm, because even with, it's the same with income tax and worldwide income, depending on where you are, if you're in the US or Canada or abroad. So just make sure that you know exactly what needs to be included in that. But I would agree, Ryan, usually it's going to be just what you did in that state.
Okay. Yeah, and it's kind of aggravating because Kentucky's like twice a year and Ohio's like quarterly, and then Indiana's monthly, and I literally sell once in Indiana and I still got to do the taxes every month, which sucks. But
no, they don't. There's don't
no consistency
sync up at all.
Even if you're a transient vendor, I'm like, they don't care. We need to know your sales every single month. So
if they could just figure their shit out, that would be freaking great. Like, it's so infuriating. Could you, I don't know if you can do this or not, but could you briefly describe the difference between an origin versus a destination-based sales tax?
Yeah, so that's something else that varies by state, right? I said I was going to say it a million times on the call. So everyone is different, but in some states, they base it on where you're selling. And in some states, the requirement would be where you're selling to, so the destination of where the product goes. So that's kind of origin versus destination, and it would depend on state which way that they do it.
Origin, I will quickly say that the origin-based sales tax states are there's not very many. So I'm just going to read them off really quick for everybody listening. It's Arizona, California, Illinois, Mississippi, Missouri, Ohio, Pennsylvania, Tennessee, Texas, Utah, and Virginia. Another reason to move to Tennessee. I'm
There you go. Sounds good to me. Yeah. Yeah, it's tough because, of course, online sellers, it's like a ton of artists, creatives, and you know, a lot of small business owners. Yeah, you're like jumping hoops and having to go through all this to figure this out. So it is, yeah. It's part of it. It's one of the icky parts.
It's the worst part.
Taxes.
Taxes.
I don't hate this. All right, while we're talking about taxes, I feel like I want to
Yes.
change the subject, but I don't know.
Yeah.
So I had this one on here, and I think I had an idea when I wrote it. I said, do you pay less income tax by paying yourself more money or spending more on expenses, and how that differs between sole proprietor versus LLC versus S Corp?
Yeah, so that's kind of going back to if you're paying yourself as an S corp in payroll,
Right.
that's going to count as an expense that is going to deduct your taxable income. But if you are a sole prop or a single member LLC and just taking draws from your company, you paying yourself is not affecting your tax, you know, your net income or taxable income at all. So in that case, for that question, like spending more on expenses would be the way to decrease your taxable income.
Do you think it's like, sometimes it's like, hey, I want to make as little income as possible, but kind of like you said earlier, if you're trying to get loans for things, or you know, is there a threshold of typically businesses want to make it's expected to not make a profit for X number of years before you need to show growth and profit, and then what's it look like years after that?
Yeah, there's definitely, you don't want to be like creating a loss, or submitting and claiming a loss in the company for years and years and years. That would definitely be a red flag with the IRS. So if you are, you know, breaking even, that would be a little bit different, less red flags, but yeah, it's definitely something within a couple years. There should be some kind of profit, or there's a plan for growth and that kind of thing. I haven't had any clients, you know, receive inquiries about that in the startup phases of their businesses, but I think as long as you are like legit in the expenses that you're claiming, you're kind of safe and protected from, because if you were to receive a letter, the biggest thing I always like prompt clients is like, make sure to read it, open it, even if it's like IRS, like don't be worried about it. It's way better to deal with it. And sometimes it is, if you're getting reviewed, it doesn't mean you're being audited. They might just want to see those travel expenses. So show them, you know, and that kind of thing. So nothing to worry about as long as you're, you know, following as best as you can, and only including legit expenses. But yeah, a couple years, and I think just you yourself would want to have a profit of some kind, you know, in order to keep the doors open if it's something that you're not hobbying with.
Yeah, Becca runs on a very different accounting system than I do.
I run off of a profit-based accounting system as opposed to him. So, but I've done business for many, many years, and I've ran off of a net zero base for a long time, and it just doesn't work for me personally as far as budgeting is concerned, and stress is concerned. I think that I'm at the point where I'd rather pay more taxes than be stressed during the year. So.
Yeah. I mean, there's definitely, it always comes down to like people's personal expenses as well, like, or just that why, and keeping that end in mind. I know I've been thinking of that even in my company that's, you know, a service-based business. As if you have the end in mind, and that's usually the why you're doing this in the first place, it helps make the decisions, even the little decisions throughout the year, because you can always like stop and remember like you're wanting to grow or you're not wanting to grow. You're just wanting to live this way and you need an X amount to do that. So everybody's is different, but keeping kind of self-awareness on that is key.
I'm going to ask a question that is awkward, and I think that we've all been expecting it. It's the question of cash. It's the question of cash.
Ooh, good question.
It's like, really, I don't think there's anything more to say other than like, obviously as a CPA professional, you're going to say like, account for all your cash. What do you think is the easiest way to proceed?
Yeah, I mean, as a CPA, you're exactly right. So any cash, any money that you're paid for your product, the IRS legally requires you to claim it. So that's kind of the cut and dry answer there.
That's what I figured.
I mean, cash can be hard. It can be almost like a pain, right? Because unless you're at trade shows and things like that where cash is coming in, I have a lot of clients that just like would rather not even use cash because it's too hard. But some people, if you're in that trade show type market type business, you're going to receive cash, and some people just literally have an envelope that then goes and gets deposited and they move on. So they're just claiming it. The state knows that you do that kind of work, and they're just, they need the cash in the company to pay bills. So they do it that way. Anything that you paid with cash that hasn't like gone into your account and then came back out again to pay a bill, you're missing that tax deduction too, right? So anything that you are trying to just pay in cash, you're not claiming that side of it either. So it's not helping you kind of either way. I would say put the cash in the account and then pay the bills out of it. And you're getting the same effect on your tax return if you put the $1,000 in and then paid bills with it. It's not like you pay tax on that $1,000 you made because it all went out in expenses. So kind of a different way to look at it. But yes,
that's a good way.
Claim it.
Have you ever gotten audited? And was there any, do you have any fun auditing stories or beware?
Fun audit together in the same sentence?
I would say depressing. Are we going to go dark with the podcast?
We can.
Audits
do you want to scare people off or
fun. What? Yeah, audits are not fun. I think they're more kind of sad, teary stories that people are just so stressed because they haven't maintained proper accounting. So they kind of rush things through tax season. They're going through all these different personal accounts, claiming all these expenses, and then they don't have anything to back it up then when they are audited. So it would be more so make sure that an audit doesn't scare you, right? And the only way to do that is keep those receipts, even if they are in a box, at least you have them to go through if you're audited for certain expenses, and have your accounting set up. So if they ask you for, it usually starts as like, I need a breakdown of this travel account. And if you're using a QuickBooks Online or your spreadsheet, you'd be able to literally download that and provide it. And so just be more prepared that way. But no, I don't have any funny stories about it. It's more like really stressful stories of people just not being able to claim the expenses then, right? It's not like the world stops spinning. It's you then have a huge tax bill because you can't claim any of those travel expenses, for our example, and your tax bill goes up, and then they're definitely red flagging you for everything you've claimed because you don't have sufficient evidence of it. So just avoid and just stay, legit with your claims.
Is there a typical time frame of when people get audited? Is it typically like 2 years later or 3 years later, or is it just completely random based on what looks suspicious?
Yeah, I mean, I think usually it surprises people that it takes a year or more to be audited for a year past kind of thing. But I think that's just as they're reviewing the millions of returns and they get to that. So I would say it's usually definitely a year or two out, where you get the letter about an audit, but usually it's like spot or review type letters where they're just asking that kind of thing. Travel, meals and entertainment type expenses. If you are 100,000 type business, but you're claiming $20,000 in meals, like it just doesn't add up. So you're creating red flags just by claiming your groceries. It's not, it doesn't make sense to do that, right? And put yourself through it. So, just keeping things as clean as possible. This is where it helps, right? Just having it not weigh on you. I think, like you mentioned, the stress. Just knowing you're okay if you even receive that letter because you have the info. There's some power to that, I think.
How would you say, so what counts as the best? I mean, obviously paper receipts count as accountability for an expense. Now, if you like for some reason lost the paper receipt but paid with it on a credit card and it was like
a statement.
Yeah, like does a statement count as accountability for an expense, or obviously an online receipt does. What's the best way to kind of like, what's the best
cover your bases?
Your records?
Yeah, I think, of course, like just having the receipt is best, and trying to get even some of my long-term clients to upload receipts, and through like your iPhone QuickBooks app, snapshotting photos is like, again, just an annoying part of being in business. But that is a great safeguard. So then you can crumple that receipt, whatever, it's in the system. So that would be the way I'd suggest to do it. I believe a credit card statement could suffice, but probably not for a full-blown audit. They would want to know that you just lost that one receipt, and so here's the bank statement or credit card statement. I wouldn't rely on that. I would try to put a system together to figure out your account. I don't know your vendors that you work with for some of your supplies, but if any of those accounts have an online account where you can see all your orders, like you said, like an online type of receipt, like that would be awesome as well. If you weren't wanting to do it all year, you could at least download that at the end of the year. But yeah, having some kind of receipt backup, even if it's virtual or has been uploaded online, would be the best.
Yeah, I use an app called Tiny Scanner Pro.
Okay.
And I snapshots, and it creates a bunch of PDFs of all of them, and you could put them in folders, and I just do that, and then I throw the receipt away.
Oh, that's a great idea.
That's perfect. Yeah.
I hate like I use Hurdler, and they are like, you can attach the receipt to this. I think I should just get that app from you, because then you could do it month by month and you don't have to necessarily.
Yeah, whenever I get a receipt, I just snap photos of it, and it like crops it to the thing, and then it like makes it black and white, and then I just put it in a folder that's in that app. As long as I don't lose the app or, lose access. Like, I probably need to back up that whole folder for each of those years so it's organized. But
yeah,
right.
And then getting the email receipts good too.
Anything like that, I recommend. Yeah, it's just like any habit. It's like kind of an annoying part of business, but it's kind of like those bank fees. At least bank fees, that's one thing I was gonna say. Like some of the most common tax deductions that are missed, I think would be things like merchant fees, bank fees. As long as it's a business account, you can claim those. So that kind of goes back to our why would you have a business account type of thing. Any interest on a business credit card could be claimed. So again, it's for business purchases. You can't do it for like a long-term debt card or something that you had and you're still paying and there's interest. And subscriptions would be something that I feel like when we sign up for subscriptions, we don't even know what card that went on. So sometimes it's worth going through, if you have multiple credit cards, to make sure those are all making it to the business one. Because especially nowadays, I feel like most companies I work with have a ton of subscriptions that become, quite a big tax deduction or write-off on their books.
Like a MailChimp and a website, e-commerce, a marketing.
Yeah, SEO,
Yeah.
lots of those kind of little expenses. And then also, education, any workshops and courses that you take, anything that furthers your expertise, or helps you in business. So it doesn't have to be, maybe related to just ceramics, but it could also be, a business type course or
Where do
course,
those
tax
fall?
course.
Where do those fall in the Schedule C? I was curious about that. Somebody asked me that recently, and I was like, I don't really.
There's not like a per se a separate category. There is a place at usually the bottom you can have other business expenses, and then your accountant is going to list out those items. So that might be if you do have significant subscriptions and editing type subscriptions, they may list those in that other business expense, which is its category, and then they kind of further divide it. If you have some significant education and that kind of thing. And I think that was it. Interest. Yeah, I was trying to think. I guess on the home expense side, internet is often overlooked. Like any of that for your home office, that would be if you're claiming that actual expense version of it. But making sure you're claiming like your cell phone and internet, and then applying your business use percentage to it. But those are often, overlooked.
Yeah,
that can add up if you're trying to come up with some more deductions.
Yeah, my accountant was like 60% for the phone and internet is kind of how we do it.
Right.
So I don't know if that's a common percentage, but that's kind of how we decided to break it down.
Yeah, I mean, nowadays I feel like that percentage gets so high because we are living on our phones, running our businesses like all the time. You're replying to DMs or this and that, checking sales. So yeah, our lives are kind of more business probably than they should be.
Can we go into that? You touched on the home studio thing. Can we go into that, like the home studio deduction by like square footage versus studio expenses, and how do you have to differentiate that?
Right, similar to that vehicle having the two options. There's the two options for your home studio, and I believe it's like $5 per square foot of your space up to 300 square feet. So what is that? A $1,500 max deduction you can take. So depending on if you're hobbying, like you mentioned, or if you are full-time and wanting a larger deduction, you usually get a larger deduction by doing the actual costs of that.
It's only 300 square feet. You can only deduct 300 square feet. Wow.
Up to 300 square feet. Yeah, if you're just using like the standard
deduction. This seems like a small space.
That's because most people just have an office, Ryan. You have an entire studio.
Okay. See, for the studio, it's like, hey, you need shelving and you need a bunch of space, or like a garage, like a separate garage that is your studio. But that would probably be more than 300 square feet, right? So it's a limit of 300. I didn't know that.
You could potentially have your wife have you rent the studio.
For that simplified method, there is a limit. We should check that. Fact check me. But
I didn't know that. No, I wasn't questioning you. I didn't know that.
There's a limit.
That's a small space.
And then for I think it's the standard method. That's where you're using all your expenses for the space and then applying your business use percentage for sure.
Okay, so that would be like your electric bill, your gas bill. Well, probably not. Maybe not.
Yeah,
your gas
basically
bill, but your electric
like
bill and
maintenance.
lights.
If you rent, that can go as part of it. If you have a mortgage, it's your mortgage interest, and then all your utilities, maintenance, that kind of thing.
And then if you have a separate studio that maybe you rent from a warehouse and you have a studio that's X square feet, you could expense the rent payment and the expenses for like electrical and all that stuff, utilities.
Yes, and those would be 100% deductions, and that would be included in your books. It's not like this separate part just for taxes. You should pay that out of your business accounts, and those would go straight to a rent expense.
Okay. And I would guess that would apply if you rented from like a community studio and you rented a booth or something.
Right. Yep, any of that that's just like 100% for business, you'd include in those operating expenses or advertising or storage type expenses.
Nice.
A benefit to having an external studio as opposed to an internal studio.
Yeah.
300 square feet, that's nothing. But I guess if it's separate, you could potentially own it as the business could own that property in that case.
Yeah, it's kind of comes back to the car though. Usually when you are a sole prop or LLC, you're going to own the property personally. And it's usually, you know, talk to your tax planner and that kind of thing, but usually that's the way to go.
Hmm. Okay.
How long, this is a simple question, I think. How long should we keep our records as a business?
Yeah, so it's usually 6 years is what they recommend. And so that's why having things digital is nice. So you don't have like, you know, old school receipts crumbling up around you. But yeah, I believe it is 6 years with the IRS as well as the CRA. And having that all backed up would be key as well in case your computer dies on you. I've had that happen to a client, and that was one of those sad, teary audit experiences we were talking about.
Oh
so.
no, that's
You
so
got multiple backups here.
Yeah, right? Go crazy on the backups. Yeah.
That's so sad.
I guess we should mention tax deadlines too. So March 15th is coming up. That's for any S corps or partnership returns. And April 18th would be for all the sole props. And so that's something to keep in mind. April 18th is kind of a doozy of a day because it's not only just your 2022 income taxes that are due, but it's the first installment date for 2023. So I hate that they do it like that because it's just a lot of funds going out depending on what your estimated tax payments are, but that is the first due date.
Oh, can you explain estimated tax payments? Because I've always had a really hard time, like, understanding when you're supposed to pay them. Like, I don't know if I've just never made enough money or like, you know.
It's usually, yeah, it usually depends on if your tax bill on the prior year was over 1,000 or if you plan that this tax year in 2023 is going to be over 1,000. That's when you would start making those quarterly payments. And so it's usually April 15th, June 15th, September 15th, and January 15th of the following year.
Okay.
And you would just make estimated tax payment, which is calculated when you do your tax return on how much that would be. But really, it's just your taxes divided by 4 kind of thing. And I feel like there's so much.
Pay the same taxes the following year.
Pardon?
It's based on how much taxes you paid the previous year. So it's just like, if you paid exactly the same, this is how much you
Yeah, it's based on that. And then also you can take into account, like if you're a new business and you didn't have to pay too much, but then this year things are like exploding, you can take that into account. So you pay more than what you paid in tax the year before, just so you don't have a bill at April then that comes up. So it's kind of taking into account prior year and your current year based on what you know for your sales. But yeah, so it's just splitting it up. I feel like there's so much backlash. People kind of hate paying estimated payments, but it's very much just like being paid like an employee. Every paycheck, they're paying their taxes, right? And so as business owners, that's the whole point of them, is you're paying throughout the year, so you don't have a large tax bill in April that people can't pay, they haven't saved, so the government just makes you pay them quarterly.
And with
mandatory.
Is it mandatory? Is that what you just asked?
It's mandatory if you are over $1,000 in taxes the year before. Yeah.
Okay, cool.
What's the difference in, typically ceramics, your slow seasons at the beginning of the year. So are you penalized for, let's say you're like, I didn't really make that much money, I'll start making in April, like I'll just double my April payment. Like, are you penalized for not paying in January or whatever that for April, whatever, and then you pay double the next one?
You can be penalized, but usually if you make up the payment, then the penalty or interest goes the other way. So some people then pay the rest in December. And so then they don't make the following payment, January payment. They just make sure they've paid everything for the year in December, just to alleviate that from happening if you know January's slow. So that's kind of an option. So you'd pay April 18th this year. It lands on April 18th. June 15th, September 15th, and then they'd make a payment, an extra payment in December before January even hits, when they have the cash flow available. So that's a way to kind of just manage the cash flow as well. But usually that interest, if you can make the next one early, you can alleviate a little bit of the interest payment.
Okay.
But that's where, like, again, splitting funds as they come in is super helpful for that exact reason. So you're not really relying on seasons as much as you're going to have that set aside to make those payments as they are required.
Okay. I had there's one that came from a listener that was actually related to more like insurance kind of thing, and maybe this is outside of your expertise, but they were asking how important is it to carry liability insurance for the business, and like does it differ how much and like where you're selling, or differ based on whether you're a sole prop or LLC?
Yeah, so I would run through that with an insurance agent for sure. But usually a general liability policy, although not legally required, is something that's smart to have. Just again, protecting yourself from being sued in the course of carrying on your business. If you are never at trade shows and things like that, like your insurance agent's going to ask those questions of where you're selling, how much exposure that you have to the public, in order to know, how big a policy or the premiums and deductibles on the policy that are needed. So it would be, a few factors like that would go into it, but usually a general liability policy, I can't think of a client that doesn't have that in place.
Yeah. There's a lot of shows that'll ask you for it, and ACT insurance is a good one is easy to just get it for like 2 or 3 days.
Right. Yeah. Just like a temporary one works for sure.
Okay. Becca, did you have one? Okay. So these are kind of just like more general questions at the end, and I know you're not technically working one-on-one with people with like preparing taxes, but what is good documentation that somebody should go into as a small business owner, go in to tax season? Like, what is the ideal client, and what should they walk in with?
Yeah, what do you want?
Yeah.
Hopefully they don't wait until tax season to bring this, but hopefully they have it.
Yeah, for sure. So if you're going to a tax preparer, you should definitely have basically a lot of what we talked about today. So those 1099s that you receive, that's one stack, right, that you're going to claim. If you have put together a spreadsheet, or you have accounting software, that's the financials that you would pull. But basically you need to know that total revenue number that you brought in before any fees, everything, just the gross total revenue. And you're going to need to know some expense categories. So having those split out, going in saying like my business expenses were $10,000, that's not helpful for whoever's filing them. So if you're unsure about what categories to have, feel free to reach out. I'm happy to help provide like a spreadsheet for that. But yeah, having those split up before you go in would be key. And then if you're going to have some vehicle expenses that you can claim, having that information. So each deduction and how much you're claiming, and again for your house, each deduction and how much you're claiming. Those would be the main things to do specifically with your business. If you're a sole prop, like we know, it goes through your personal taxes, that 1040. So if you're married and if you have kids, or a whole bunch of other personal things would go into your tax return. And usually your tax preparer is going to have a tax prep form, right, where you're checking boxes of different investments you have, and kids and dependents and things like that. So that would be separate. But for your business, those would be the main things of just having a really clear idea of revenue, expense categories, your vehicle, your home office. Those would be the big ticket items.
Cool.
Okay. Is there? I got a question about this recently about donations.
Right.
Is that tax deductible? Is it weird because if it's pottery, you decide the value? Like, how do you handle donations? Whether it's donating your
Yeah,
blood to a
so
fundraiser or
donations usually you would need to have a receipt from a certified nonprofit, and that's going to be what the tax preparer would ask you for. And if you are donating product, that's where there can be a gray area. But if they're submitting a receipt for what you've donated, that is usually what the tax preparer is going to go by, is that a nonprofit has issued a receipt, and they would need to have all their info on it. It can't just be like a scribbled piece of paper, that kind of thing, in order for them to be able to claim it or accept it on your return. And that's all filed for you personally. So in the case of like an LLC or something, the donations would be claimed on your personal return. So kind of separate from the business, even if you paid it out of the business account. But that would be what you need. So come the end of the year, it's great to request those receipts if you haven't received them yet, because lots of times I think people don't claim their donations, and so places just don't send them out even if they're required to. So yeah, definitely track those down as you donate.
Okay, interesting. Yeah, that one was kind of an interesting one. I had one that was kind of a final one, and I don't want to leave out the Canada folks. Is there anything significantly different in Canada with this taxes and expenses and that may appeal to them more?
Well, the categories and what you can claim is pretty much very similar, but the taxes are just completely different in how they're set up or how our returns are. We don't have S Corp LLC type scenarios and stuff like that. So taxes are different, but for this kind of stuff, for a sole proprietor, and those tax deductions, things like that are similar. Yeah. Probably limits, square footage, that kind of stuff. Limits could be different, but overall, same kind of principles apply, I guess.
Okay. Is that limits in metric instead of imperial?
Right. I'm trying to think. Actually, I think it's square foot. It's still square foot on the house. Yeah.
All right.
Yes.
Okay, one of the last ones I had. What are some of the common tasks small business clients tend to prioritize less that you think is more beneficial to their business for tax season and maybe for the long term of the business?
I would say that I think just honestly, the setup of accounting at all. So people feel like, well, I've only made like a few $1,000s. Like, at what point do I have to claim this? Or at what point am I a business, or that kind of thing? And my answer is usually right from the start, just set it up. And it kind of comes back to the whole why, keeping the end in mind, self-awareness thing of, if you're trying to replace your 9 to 5 or send a kid through college, or it depends on why you're doing it and how serious you are with it. But even if it is like a Sunday hobby type of thing, if you're making money from it, you need to claim the revenue and claim the expenses, and you're not going to owe a ton in taxes. I think there's just a fear of that. But yeah, I think under prioritizes just setting up books. And even if you are maybe investing a small amount and having someone set things up for you, it doesn't mean you need accounting service going forward. It's probably something you can manage on your own. But if it is a foreign thing to you, I think having a bit of advice off the top of just like these categories, or getting that spreadsheet, buying that spreadsheet online, that kind of thing, is where I'm realizing people might not be ready for outsourcing accounting service, but they just need that head start of being organized. So yeah, I think just start from the start. Don't be the stressed out creative coming to me a year in or something. It'll save some headaches, I think, for sure.
Sometimes are you referring people to say, like, you should probably find a bookkeeper if they're stressed about it too much, or because it's that constant check-in that people need personality wise? Some people are more organized and some people aren't.
Right. I think it more so like that point of outsourcing versus not. I think it comes to just someone's, experience, or lack of experience in that area. So for some people, even if cash flow is tight, they're like, well, I'm outsourcing this because I don't want to do it. And they know that very clear. While other people are more apt to be like, well, I'll figure it out. And it creates just more havoc for them and really zaps creativity, to be honest. And they find that they should have outsourced sooner. So I think when people come to me, they're usually at the point that they need help and want to outsource, and that's what we kind of specialize in. Or they're looking for a solution before they need to outsource, but they just want to be organized, and that's awesome. That's super welcomed. I'm always happy to answer those kind of questions because it usually then when you're ready to outsource, you're pretty organized.
Yeah.
Okay. Nice.
Yeah.
So I wanted to also have people figure out what is the extent of like the services you offer and like what kind of clients do you have so that you don't get a bunch of random people that are like, can you do my taxes for me? So
right. Yeah, for sure. Well, I work with creatives, makers, lots of people in like wedding industries, as well as some artists and people more focused on products. But most of my clients are service based. Or have small inventory levels. And we specialize in QuickBooks Online and setting up accounting systems. So it doesn't really matter what kind of business you're in. If you just want your QuickBooks set up, we're happy to do that for you and customize it to your company. And that is something that I love doing because I get to work with a lot of different creatives and kind of set that up for them. And then if you're looking for monthly accounting service, that's something that we provide quotes for as well. But for tax service, we do only work with people that we are doing their accounting throughout the year. And that is for Canadian-based businesses. And in the US, we work with enrolled agents throughout each state who actually do the tax filing. So we are purely accounting services in the US.
Wow.
Yeah.
Nice. Yeah, I'm guessing, Becca, you've get in QuickBooks. Like, I'm sure it's a very learning curve driven. Like, there's a lot of tools once you pay for it, and then
it's easy if you don't fuck it up.
That's the thing. It's like this amazing tool, but I think they too probably even market it as like the solution that is going to do your books. And it doesn't do your books, but it's a great tool to use in order to do it. So there is a lot of setup that makes it easier. If you just start kind of adding and doing things, it can get super messy and we just start from scratch versus going through transactions. So yeah, that's why I just always kind of promote that setup. Even if you plan to do it yourself and want to learn that skill set, that's awesome. But just kind of have the bare bones set up right.
Yeah, and you're able to like map people's like, here's what I currently do, and here's how you would do that in QuickBooks, and paying for a service like you all provide. Like it might be a little hit, but you can also expense that professional services.
Exactly. Yeah, it's a tax deduction. And you just get your QuickBooks set up correctly. We do a Zoom if you're wanting to do your own books to kind of show how we recommend you do it. I will say I do have people come back then to want to outsource. So usually if you're unsure if you're ready for QuickBooks Online, I would say stick with what you're doing or a spreadsheet. And do it manually so you really understand your numbers, and then when you're ready to outsource, let the accountants use QuickBooks kind of thing is another way to look at it. Yeah.
Awesome. And then did you want to talk about, you had a online program that you're taking a wait list for? Do you want to talk about that before we let you go and let everybody know?
Well, yeah, I mean, you can check out on my website if it is something you have these questions that come up. We're just trying to get something going, the entrepreneur virtual experience, where I'm just doing a lot of this, like answering questions for people, because I think that creates so much roadblocks and stress for people. They just don't have a place to ask. And that's kind of what these series are going to be about, is just focusing on some frequently asked questions that we get a lot of. So if you head to my website, there is a page for that, and I'd love for you to get on the wait list, and then you'll get the email when things go live.
Awesome. Sweet. Okay. Do you want to tell everybody your website, where they can find you? I find you through Instagram. If you want to plug that,
sure.
Feel free.
Yeah,
we just really appreciate your time, for sure. This is amazing.
Well,
Amazing.
hopefully it answers some questions for everybody. My website's alohafridaycpa.com, and I'm pretty sure you can just search that in Instagram too, and I'll pop up. But it's at Jamie_Boyack is my Instagram, and yeah, I'm on there too much, so you can probably find me on Instagram pretty easy.
We all
I'm sure you got some good content when you were traveling recently, so that was
right. I find that content easier to do when I'm traveling versus like actual business stuff, but I'm working on it.
Yeah.
Hmm.
Gotta manage the interruptions and
Yeah,
okay.
right.
Okay, Jamie, thanks so much for your time.
Yeah,
Thank
thank you both.
It's been much needed. We answered a lot of questions. You answered a lot of my questions. I'm sure you answered some Becca's and everybody out there. So
I think Isaac's shoe is gonna get hit off the top of the listening block.
Oh.
You're gonna be the most listened. I'm pretty positive.
oh man,
That's
it's
funny.
right
Well,
at that sweet spot of the year. So I mean,
Yeah.
yeah, right. Well, if you need to reach out, if more questions come in, always feel free to reach out. I'm happy to connect with cool creatives. Definitely an interesting industry. So I love that.
Thank
Okay.
you so much.
Thank you so much.
Thank
and
you.
we'll see y'all next time. Thanks everybody for listening.
Bye.